Hey, what's up, everybody? So, I want to go over a few things in the morning, Monday, August 24th. Let's take a look at the US dollar. Okay, I'm gonna go on the daily chart, explaining what is a bear flag and why I think the move that we're seeing in the US dollar index uh, that is weak for now until it proves me otherwise. Right now, I am going to call it for what it is. Okay. Uh, what is a bear flag? A bear flag is basically when you see uh, a bearish pattern, okay, which means when the instrument or the in this case US dollar index is going down. Now, nothing goes down straight in any market, typically, and if it goes down straight too much, it will bounce back. Um, so in this case, uh, US dollar had a spike in March the 5th, okay, because everybody sold the market around the world sold and converted it into the US dollar. Okay, their currency into the US dollar, or when they sold when everybody sold out of their um, asset, they converted it into the US dollar. So when that happens, you're seeing a spike in the US dollar in March 11th. That's couple of days. I think it was a couple of days before the Federal Reserve meeting where they decide to uh, lower the interest rate to 0%. Okay, that gave the dollar the signal to go berserk. Okay, and then in March 20th, you see the dollar being bought again. Okay, dollar is being bought again. So the people that made money, they bought the dollar. Now here you see there is no. I mean, this is a bearish volume, very very weak. Okay, when you have a massive downturn, when you have a massive downturn, and then you have a bearish, when you have a very weak candles here, and let me zoom in a little bit. When you see this weak candles, this means, okay, when you see this candles, this means that the dollar bullish sentiment is weak among the investment community or around the world. Okay. So as you can see, that there's a higher trend in a light volume. It's a higher trend in a light volume, and then it's making a higher lows, higher lows, higher lows, but in a very weak volume. Okay. Let me see if I can do this. Okay, this is better. Okay, higher high, higher lows. Okay, the most important thing about the flag, you just need to know that there's a very weak volume. Okay, and few weeks later, okay, the dollar dropped again, and then you had again another higher highs, higher lows, with a weak volume, and then the dollar dropped again. Okay. Now, based on my uh, projection of what's happening next couple of months, I see the dollar might be going sideways, creating this type of pattern of bear flag, and it will go down again. Okay, and I might be wrong. Okay, I might be wrong, but that's how major moves behaves. Um, because the reason I'm saying I might be wrong is because, let's be honest. Let's go to the weekly chart here. You see the dollar is still within the bullish multi-year trend. Okay, still within the bullish multi-year trend, and I just made another trend line that suggests that there is still a very decent support for the dollar, and that support is being confirmed by here. 1, 2, 3, 4, 5, 6. It has been confirmed 6 times. So this price of 92.12 is a very strong support for the dollar, as well as this line right here. Okay, so here you can see the dollar going back and reversing. There's a possibility. Okay, but with the daily move being so weak, I'm thinking my bias is down. My bias of the dollar is still down, and if I am wrong, I will have to see dollar break this line, these two lines, and then create some kind of consolidating 93ish, 94, and then moving higher on a very decent volume. I need to see that for me to be wrong. But right now, that's not the case. Right now, the dollar is acting as if it's in June 8th, okay, and then it's acting as if it's in May 13th. So it's still bearish. So I'm gonna see it. I'm gonna call it as I see it for now. But I hope I was able to explain what is a bear flag is. When you see a downtrend, you have to locate the bear flags. If you can't locate the bear flags, then you should be able to put your position, or you should be able to make some good move. Hopefully the moves work out for you, and just be aware of the environment that you're in. Be aware where things are in the real economy, where the policies are, how the big players are moving, and then you look at the chart and see if the chart is aligning with the rest of the puzzle that's being put together in the real economy, as well as the narrative that's being played out. Okay, so taking those into account, looking at the chart and looking at this pattern, you'll be able to have a better understanding of what's going on. And I just wanted to I also made some mark here around 2017 when the dollar dipped for a couple of like a year, 2 years almost. What is it, a year? Yeah, it's about a year and a half. And you can see the bear flags here. Once, twice, okay, 3 times, 4 times, small bear flag, 5 times, okay, and then there was a fake breakout here. So this is what I'm saying. Like, this can happen here too. See how it went all the way down, touched the support, came back, and it had a head and shoulder. 1, 2, 3. It was a head and shoulder, broke out, but then went down and tested on 88. So in these type of big move, generally you will see an extension. The market extends itself just because of the sentiment, because of the sentiment is just so bearish, and you can see it on these candles, like it's very bearish. So you're going to see these move extend. Okay, but just because it happened here doesn't mean it will happen here. So you have to be careful. You have to position yourself and mentally prepare yourself for these move to reverse. Okay, but then you'll see the move reverse has to correspond with what's going on in the real economy. So you have to pay attention to that too. So that's the bear flag. That this is the U.S. dollar index, and that's my analysis.